Maybe I am crazy, or even completely delusional. Maybe I am just thinking outside the box, but it definitely doesn't feel like a bear market. As we get into this video, we're going to be diving down into all of the technical data for Bitcoin. We're going to have a look and see what's going on with the charts. We're going to have a look and see what's going on with Glassnode. And we're also going to have a look a little bit at Bitcoin's history. As we get into this video, guys, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel and you haven't actually stumbled across us yet, then go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you are going to be kept up to date with everything that we do here at Cheeky Crypto. Right, with all of that said, done, and out of the way, guys, let's jump on down into the desktop and take a look at what is going on here with BTC. Okay, guys, so we're really going to start things off by taking a look at what is going on the hourly chart. Then we're going to dive down into some Glassnode and we're going to have a look at some Bitcoin history as well. So obviously we had seen a significant pullback just in here yesterday, and then we had the push up, and we actually had this double bottom, which actually was a bit of a bull flag. We're looking to move on up, and we started to see an ABC correction come down here. We've got a bit of a target. We can see that we've just pulled back a little bit lower. We found good support just on this previous area of resistance, as well as you can see just over here and here. And it's actually coming in at $36,000 right down here. So really good kind of level of support right now. The stochastic RSIs also pulling back. It's into the oversold area. There's a possibility that we drop down a little bit lower if we actually run this from that high point just up here to this low point. We can see that there is the ability to pull back down a little bit lower, but not too much. We've gone down to the 786, I think, so far. So again, that's pretty much your standard kind of correction. There's nothing out of the ordinary about any of that. So we are still looking, pretty interesting here. Now I'll move the target back down here, and we can obviously see this C wave actually looks like it's likely to move up into this area of about $38,000. This is the most probable area before we start to see some form of corrective action down. Of course, if we do actually go past 38,900, let's just call it 39,000 to be kind of comfortable with it, that would be triggering an impulsive move up, meaning that we'd have a fourth wave down and a fifth wave up. I know that there is lots of kind of speculation as to maybe moving up to 40k before seeing any potential pullback. It's still very much possible, but at this point, I don't think it's probable unless we go impulsive. So we're waiting to see what happens there in terms of that on this smaller time frame. Ultimately, Bitcoin has been incredibly volatile recently, and I do think this is actually starting to come to a bit of a close, but it is a little bit of downside I'm seeing on the larger time frames. And once that kind of gets completed, we are actually looking pretty good for good progression to the upside, right? So we're getting very close to that bottom area for Bitcoin. Now, back into the charts here, what we can do, of course, is bring this up into our daily view. Now, when we actually take a look at it from a daily perspective, you can see that there's a much larger ABC move, really bringing us down, right? And this ABC actually looks like it's going to finish around that $31,500 range. That seems to be the most probable area that we are looking for Bitcoin to kind of correct itself. Now, on here, obviously, once that comes in, that means that we're going to see a reversal, right? A pretty significant one to the upside. In order for us to be confident about this reversal, in the sense that we're pulling down significantly, and ultimately we are moving out of this correction phase, we would need to push higher than this low of our A wave, right? So $42,000 in that range would basically mean that we're invalidating that C wave any lower. Okay, so right now we're very much in the grasp of counting this down. Whether we want to count it as 5 waves or 3 waves, entirely up to you. But inside here, it's very clear that we are moving down, and we obviously have our C wave target. Okay, so that comes in, as I said, $31,500. Now, as we come up into our weekly view, we can also see this flat correction that I spoke about not too long ago. Here we can see that we have a pullback, a push up, and a pullback down. Now, with that B wave being slightly higher than our originating point, just by a few percentage points, it's important that we acknowledge that it's more than likely that we're not going to go down lower than 28k, but it is possible, right? It is possible that we could lose that area of support momentarily, almost like a wick, a flash wick, just going down there, taking out some key technical zones, and then moving on up. And what you'll find here is that this flat correction, this zigzag pattern, basically means that we're still in that fourth wave correction and that we haven't actually progressed on up into that fifth wave just yet. This is actually really good news for Bitcoin because it means that we should be looking at progressing quite nicely to the upside in the longer term view. Okay, so obviously for this to happen, we have to be confident that we're not going into a bear market, right? And there's lots of speculation about $20,000 Bitcoin in the same way that there was back in May and June, July of 2021, right? There's always going to be people who want to kind of short the market or make you kind of feel that fear so you can kind of sell off and basically buy your fear, etc. There's lots of different strategies to make money whilst the market is pulling back down. And as a result of that, you have to really be, confident in the fact that we are bear market and before you want to necessarily, jump on board that particular ship. Now, in terms of the weekly chart and the flat correction, one of the things that's really important that we have to acknowledge here is this level of oversold that we are currently sat on the weekly chart. This is somewhere that we've been previously. If we just look back at the chart here, we were previously in this area of oversold right when we were at the bottom of that 28k dip that we had from 65k to 28k. We obviously rode up into new all-time highs as we were in this overbought area. We've pulled back down. We're right back down in that oversold area right where we are now. So to start to think about, maybe going down lower than $28,000, although it is possible, I do think it's improbable. I don't think it's likely to actually occur. And we're more likely kind of area of support is going to be around that kind of $31,000 level. As I said, that's the C wave area. And again, that would form a B wave move before we actually start to move on up overall. Now, here we can also see that this fat zigzag pattern, i.e. the corrective move, the wave 4, hasn't yet actually finished, but when it does actually finish, that means that we should be looking for an impulsive move to the upside for Bitcoin. So that's pretty encouraging stuff. Now, as I just clean this up a little bit, the other thing that I really wanted to kind of show you guys, to kind of clarify why on this channel we're bullish, not bearish, right? Yes, there's some downtrend to be had here. We kind of knew this was coming. We've been speaking about it for what feels like a very long time at this point. We kind of knew that Bitcoin was going to pull back. We know that the altcoins were going to react the same way. And, if you're in our Discord, in our Patreon, you'll know this as well. And ultimately, what we're really looking for now is that reversal. We're looking and waiting for it. We don't think things are necessarily there, but we are definitely bullish because we are seeing new all-time highs on the horizon. We are not thinking that we're going down into those really low areas of bear market scenarios. The pullbacks that we've seen, and I'm going to get into that in a moment, have been quite significant. Yes, they're really hard to ignore. Definitely, when you review some of the altcoins, there's been some very, very hard-hit coins. Chainlink is a clear example of this, along with many other cryptocurrencies as well. But for case of Bitcoin here, there's nothing actually indicating that this is going bearish. Just look at the market cap as what it was previously and to what it is today. Ultimately, it hasn't actually been affected all too much. And for that reason, I think it's really important that we actually bring up what is going on with Glassnode. Now, Glassnode data is really, really key for understanding what retail investors are doing. Ultimately, there is some stuff outside of Glassnode data. It's really hard to ignore that. We're not going to be taking a look at short positions and long positions. I'm really focused in on people who are hodling and what is actually going on with people who actually buy the assets rather than just gambling on whether the market's going down or up. So in this particular video and this particular chart data, what we're looking at here is going to be 2021, and we're going to load up this chart. Obviously, as many of you guys know, this is the video or the chart, I should say, that I really like. It shows us the net difference of what is going on with exchanges. And what we actually have here again is basically day after day an increase in the amount of Bitcoin that is leaving the exchanges. And when it's leaving the exchanges like this, guys, we had 60,000 Bitcoin leave yesterday. Okay, the day before that we had 43,500 Bitcoin leave the exchange. And as you can see here, this is unusual, and it's unusual because when the price of Bitcoin goes down, you normally see Bitcoin get loaded up onto exchanges. Instead, what you're witnessing here is accumulation. It is not, a mass selling, for example. When we actually have a look at this data again, what do we see? Well, we actually see, when we look at May's crash, for example, we see Bitcoin loading up with a net difference on exchanges in the green. More Bitcoin going onto exchanges than is leaving, right? i.e. people are trying to sell as much of the Bitcoin as possible as that price pulls back. Then, of course, as the price moves up, what do you see? You start to see Bitcoin leaving the exchanges. When Bitcoin leaves the exchanges, this is usually when Bitcoin's price is going up as people are getting confidence in the market and they're looking to store that Bitcoin off of the exchange in some form of cold storage. Then what do you see? Well, you start to see the price actually move up into that $67,000 high, that $69,000 high. And at this time, what did you actually see? You started to see Bitcoin go onto the exchanges. This was unusual behavior for a couple of reasons. It happened before we actually kind of reached those high points. Okay, so as the market was moving up, you would expect Bitcoin to leave, but actually you started to see Bitcoin get loaded onto the exchanges. Ultimately, what we actually see here is that Bitcoin coming onto the exchanges, the price of Bitcoin coming down, not too much actually going onto the exchanges at all at that point, and more Bitcoin leaving, i.e. this is accumulation. So we spoke a lot about, the price points that were being hit with Binance on pretty much every single hourly candle. It was just beyond a joke. They weren't even trying to hide it by that point. And it does actually translate across into the 4 hourly, the 8 hourly, the daily charts, etc., where you're hitting price points very much to the penny. Now, yes, that can happen. It can happen quite a bit, but it doesn't happen as frequently as it has happened with Bitcoin during this particular phase. So when we actually have a look at this, we can actually see a lot of accumulation going on. We see a lot of Bitcoin leaving the exchanges as the price is pulling back down, which is very unusual. You would not normally see this. And then obviously now we actually have even more Bitcoin leaving than left, during the late December, beginning of January. More Bitcoin has left. Really significant numbers of Bitcoin has been leaving. And again, this is what gives you some pretty good confidence. You layer this data up with what is going on with the charts in terms of where the stochastic RSI is on that weekly, how the daily chart is looking, how those wave counts are working out for us. And you think, yes, this definitely looks more like accumulation than a bear market. Okay, so really good data. And again, we can couple this up with the balance of Bitcoin on exchanges, again, decreasing. We haven't been this low. Well, we haven't been this low in a couple of years. Okay, so this is incredibly low to have this little Bitcoin on exchanges, right? This is going to be a shock to the supply once that narrative actually turns. This is going to drive that price. Like I always say, market cap is completely irrelevant in terms of price discovery. All market cap does is tells you the current price multiplied by the circulating supply. Two things, however, guys, really do matter when it comes to price discovery: the supply and the demand, okay? And we're having a shock to the supply here for Bitcoin. Once that demand kicks in, this price of BTC is going to absolutely go nuts. So I am expecting new all-time highs. Now let's actually go back into the data here in terms of the charts. So maybe you're still, not convinced. Maybe you're still thinking that we are bearish. Maybe this data isn't enough for you to know that, Bitcoin's actually kind of reaching its bottom, where we're not going to be seeing $20,000 Bitcoin, at least not probably. I don't think it's very probable that we're going to find a $20,000 Bitcoin. But with that being said, what we do actually have here is a pretty significant, area of retracement, fantastic opportunity for accumulation, which we're seeing inside Glassnode data, and potentially, that next step to the upside. Now, the other thing I'd want to show you guys is, of course, the usual chart that we like to follow. This is showing us the pullbacks that we've had for Bitcoin, right? So lots of data across multiple years. We're looking at what kind of pullbacks have happened here for Bitcoin, and what is common practice, what is not common practice, and all of that kind of good stuff. So for the most part, I'm going to ignore 2021 for a moment, and we're going to shoot on back into the 2017-2018 bull run. This is really important because this kind of gives you a bit of a foundation to knowing exactly kind of what to expect in this space. Maybe this is your first bull run. Maybe you weren't really around in 2017, 2018 to know really what it was like. And therefore, every small dip that you see is actually a bear market, or at least it feels bear market like to you. Ultimately, actually, when we take a look at the data, what's the most common practice for Bitcoin, however, is a 40% pullback. That's pretty common practice. So we have basically at the start of or midway through 2015, the start of the 2017 bull run, effectively, we actually see a 37% pullback. We pushed up, we fell back down 42%. We pushed up, we fell down 40%. We pushed up, we fell down 35%. We pushed up, we fell down 34%. We pushed up, we fall back 40%. We push up, we fell down 39%. We then had that blast off the top, and then we fell back by 70%. Okay, that 70% pullback is the bear market coming. Okay, from there we bounced up, and then we fell and 44%, actually setting the higher low, giving people that kind of sense of security, thinking that actually no, it's fine, we're going back up again. But actually in reality, you'd closed inside the Gaussian channel at that point, and whether that was a a done story by that point in time. And obviously here you start to go down into those lower lows and you continue to fall back down towards 84% total value lost from all-time high to bear market low. Okay, so the reason I tell you this, it's really important that we understand that a 40% pullback for Bitcoin is common. It isn't rare, it's not unusual, and it isn't a indicator of a bear market. Okay, really basic stuff, right? This isn't traditional finance. Traditional finance, you know, a small blip on the radar of the stock market and bam, it's bearish, right? In the case of crypto, we don't have that. Cryptocurrencies, and specifically Bitcoin here, have no regulations really assigned to them globally. And as a result of that, you know, it's kind of fair game to manipulate prices if you're a whale. And as such, you see these really large swings in the market. Now, as a retail investor, it's our job to know this. It's our job to understand this, and it's our job not to act emotionally about this. So as we get into this and we go back up into what's been going on in 2021, well, actually, we've had a pretty easy ride, guys. I'm not going to lie, I can't sugarcoat it. We've seen a 21% pullback. Just up here in August of 2020, we then had a good run up and we had a pullback of 32%, and then we pushed up again, we fell down 26%. This was then led into a 56% pullback, right? So it's been actually less emotional in 2021 than maybe in previous bull runs, right? Whereas a lot of volatility before, the price move up, pull back down, lots of trading activity, lots of accumulation from whales, etc., lots of price manipulation. And actually, what do we have in 2021? We have a couple of small pullbacks led then into a slightly larger 56% pullback. Again, not the 70% pullback that you would expect from a bear market initial kind of indicator. And what actually do we have here? We have a 56% pullback, which is, yes, a little higher than the standard average of 40, and I can understand why people were getting very worried at the time, thinking that it was a very bearish or bear market indicator. Actually, you know, on this channel, we actually indicated this as a third wave high because it went impulsive, and then obviously that pullback, which was indicating the fourth wave. I've spoken about this obviously at the beginning of the video, thinking that we're still actually in that fourth wave correction with a zigzag corrective indicator actually going on right now. So yes, we had that 56% pullback. From there, what did we do? We pushed up and then we fell back down 24%. Again, this could have been that kind of bull trap, bear trap, where ultimately what you're looking at really is, you know, getting that indicator to say, yes, it's a lower low, let's short the market, and then you went up and set that new all-time high. Okay, so one thing that we do know is that, you know, whales and institutions, they're getting smarter about things. You know, they're not necessarily hiding things overly well, but they are, of course, you know, not just doing the standard tactics that they've worked previously. They're mixing things up a little bit and they're shocking the system. They're doing all sorts of Wyckoff accumulations, Wyckoff distributions, etc. Lots of different kind of fancy patterns out there that ultimately are shaking out and scaring retail investors because it's something new that they haven't seen before. So yeah, so far we've actually had a pretty easy ride. And then we obviously pull back into this other 52% pullback. Not too dissimilar to what was happening in May, okay? And again, we are seeing very different data. So what we saw in May, we saw a lot of retail investors completely shaken out of Bitcoin, and actually we haven't seen that. Glassnode data is indicating quite the opposite. We're actually seeing pretty good, comfortable numbers inside Glassnode that is actually indicating that accumulation is happening here, and it isn't a bear market. It's not an indicator of bear market. Whether you choose to believe that or not is entirely up to you. And just present you the data here as I see it, and I give you the conclusions as I draw from it. And ultimately, it doesn't feel like a bear market to me. I don't think we're in a bear market. I think we're in a phase of accumulation, and I think this has come into a bit of a close. Once we actually come down into those low ranges of the $30,000, I think that's where the turning point is likely to happen. But we are constantly looking out for invalidations as well. We want confirmation that the bottom has come in. That hasn't happened yet. Instead, we're actually still quite within the realm of actually possibility of going down into that low 30 range. And then obviously we're then looking for that impulsive move and that impulsive break to the upside where we can see Bitcoin actually going ahead into new all-time highs. Right now we aren't there, but I think it is coming. I don't think we have all too much longer to wait, but timing is, of course, the hardest thing to get right. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.